Hi students, so this lecture for BBA 4th SEM on corporate accounting 2nd. In the last lecture we solved the problems on the amalgamation in the nature of merger as well as in the nature of purchase. Okay, so both the chapters we are going to solve, okay, at a time, and we are seeing the problems. Only difference is what that in the first chapter and the second chapter. So first chapter is related to the amalgamation in the nature of merger, and second chapter is what's amalgamation in the nature of purchase. Okay, so only the five condition is there. If the five conditions are satisfying, that it is nothing but the which method we have to use. The problem is related to the amalgamation in the nature of merger. Okay, if it is anyone not the following follow the satisfaction, the satisfy the what's the entries sorry rules, then it is nothing but the purchase consideration. Okay, so now see, this is the problem. One more problem is there, and so now see the problem. Following are the balance sheet of A Limited and B Limited as on 31st 3 2015. So this balance sheet is given, A Limited balance sheet as well as the B's Limited balance sheet. Okay, so the shareholders fund, now see the total of the liabilities what's 84,000 of the A Limited, and the total liabilities of the B Limited is what's 56,000. Okay, and the share capital of this A Limited is what's 35 lakh, and B Limited is a 26,250 26 lakh 25,000. Okay, so reserve and surplus note is given. How it came, this 31 lakh 50,000 and 12 lakh 25,000. Okay, so in the note number is given. According to that we have to see this. Okay, so and the assets, the total asset is what's 84,000 for the A limit, 84 lakh for the A limited, sorry X limited, sorry A limited, and the for the B limited is what's 56 lakh. Okay, so this is the printing mistake here. For this X is nothing but the A and Y is nothing but what's this the B. Okay, so this is the notes is given here. For just see here, for the tangible fixed assets, note number 2, it's a tangible asset fixed assets. This is the note is given, how it came 63 lakhs as well as this 43 lakhs 75, how it came, it is given. So next, trade receivable, note number 3, how it's given here, trade receivable, trade payable. Okay, so how it came like this, it is given, sorry, this trade receivable, actually it is printing mistake here, the trade payable is given, actually it should be the trade receivable. Okay, so now see this other information. A limited takes over the business of B limited for a consideration of rupees 35 lakh to be satisfied in fully paid equity shares of rupees 100 each. Okay, so now this sentence is very important. You have to understand this sentence first of all. Okay, A limited takes over the business of B limited. Okay, so A limited is the transferee company and the B limited is the transferor company. Okay, so it means what's A company is going to absorb, or A company is going to purchase the B limited's company. Okay, so it means what's the B is the what's the transferor company, and A limited is the transferee company. Okay, and A limited is ready to give rupees 35 lakh for the B limited's for the purchase of the business of B limited. Okay, so this is the purchase consideration, it is the lump sum amount is. Okay, so lump sum method we have to use here. Okay, this is the lump sum amount is given. So now see other information. So other information is what's development rebate reserve and export profit reserve are required to continue for 2 more years. Okay, so with the help of that information, now we have to prepare ledgers account in the books of B limited, because the transferor company is there, and B is the past journal entries, and prepare balance sheet of A limited after absorption. Okay, under merger method as well as the purchase method. Okay, so it means what we have to use the merger method as well as the purchase method. Okay, so you know that there are 3 steps are there, and which are those 3 steps? First one is what we have to calculate the purchase consideration. Second one is what we have to transfer the journal entries in the books of the transferor company, and third one is what we have to pass the journal entries in we have to pass the journal entries which is related to the which is related to the what's the incorporating, and finally we have to prepare the balance sheet. Okay, so we have to prepare this all these things. Okay, so now see First of all, we will prepare the ledgers accounts. Okay, so it's related to the realization account, and you know that how to prepare this realization accounts. Okay, so the debit side which we have to take, and in the credit sides what we have to take. Okay, so in the debit side all the assets we have to take. Okay, as well as in the liabilities side all the liabilities we have, sorry, in the credit side all the liabilities we have to take. Okay, so this is the liability in the asset side. All the, sorry, in the debit side all the assets is taken. Okay, and in the credit side all the liabilities it's ascertained, and it is the equity shareholders. Okay, amount is ascertained, which is the loss transferred is a 3,50,000. Okay, so it is the ascertained amount. Okay, as well as it's prepared the a limited account, which is the transfer account. By in the credit side by equity shares account is 35 lakh, it is related to the purchase consideration. No, okay, so it's again you have to pass as a to realization account, it's a debit side rupees 35 lakh. Okay, like this we have to prepare. Next, equity share account. So for this debit side to a limited account, it means what? So it is given by the a limited to the b limited. Okay, so to a limited account rupees 35 lakh, to in the credit side by equity shareholders account it's a 35 lakh, and the close it. Okay, so equity shareholders account you have to prepare again. Okay, so in the equity, in the credit side by equity shares account we have to take general reserve, development reserve, export profit reserve, profit and loss account. These all these things are given in the notes. Okay, these all these things you have to take in the credit side. Then we have to assert, as well as you have to take in the debit side as only the purchase consideration. Okay, to equity shares account, and ascertained amount is rupees what? 3,50,000 is the realization account loss. Okay, so like this you have to prepare this account, and now you have to pass the journal entries. Okay, so first journal entries, you know that how to pass the journal entries, because the format is given already, format is given to you. Okay, so the first transaction is what's related to the what I told earlier. So all there is a no need to pass the all the journal entries, just you should know which is entries needed to pass. Okay, just you have to understand that. Okay, and in this problem we will see how many transactions we have to pass. So first transaction is related to what? For transfer of all assets and provision. So this entry we have to pass, it is necessary, because all the individually assets we have to take, as well as the what's liabilities we have to take. Okay, so realization account debit, to each assets account credit. Okay, so this is under the merger method. Okay, uh, it means what's actually prepare the ledger accounts in the books of the b limited, pass the journal entries in the prepare the balance sheet of a limited. Okay, so it means what's not the sorry, it's don't actually we have to pass the journal entries in the books of the a limited. It means what's the incorporating entries we have to pass. Okay, not the what closing entries, no need to pass in this problem. Only we have to pass the what's the uh, we have to pass what's the incorporating entries. Okay, now see here, under the journal entries in the books of the a limited, land and building it means what? For adjustment of purchase considerations, there is a first transaction is what? For adjustment of purchase consideration, and it's there is a no any adjustment here. Here we are not calculate the purchase considerations, already it's given the 35 lakh. Okay, so there is a no need to pass this first entry according to this format. Okay, so now see the second entry, which is related to the for incorporation of assets, liabilities and reserve. Okay, so it's related. So each assets account debit to preliminary expenses, profit and loss account discount on issued capital loss account debit, each liability account credit to reserve, profit and loss account credit to business purchase account credit. Okay, like this we have to pass the journal entries. Okay, so now first of all see the each assets account. Land and building account debit, it's a 24 lakh 50,000. Plant and machinery account rupees 17 lakh 50,000. Furnitures account, stock account, debtors account, bills receivable account. Okay, so bank account debit, it's a 1 lakh 70,000. General reserve account, it's a balancing 87,500. To liquidators of a limit b limited, it is a purchase consideration credit, creditors account credit, development rebate reserve account credit, export profit reserve account credit. Okay, so like this you have to, as well as here the narration is given, being incorporation of assets, liabilities, reserves of b limited at book values, the excess of purchase consideration over overpaid up share capital is adjusted against general reserve and profit and loss account. Okay, so it is nothing but the 8 lakh 57,000 minus 7 lakh 87,500. The remaining amount is what? 87,500. Okay, you have to see in this note, you will understand this. Okay, so and next transaction is what's the liquidators liquidators of B limited. It means what's this transaction number fourth. Okay, directly there is a no need to pass the third transaction according to the format. Now see the transaction related to the four for settlement of purchase consideration. Okay, liquidators of transfer company account debit to shares capital account credit to share premium account credit to bank or cash account credit. Okay, so now see this liquidator of B limited account debit, it's a 35 lakh, to equity share capital account credit, it's a 35 lakh. Okay, being settlement of purchase consideration by issue of 3 lakh 35 lakhs 3 lakh 50,000 shares of rupees 10 each. Okay, so like this we have to solve the problem. Just try to understand the problem. First of all, just read the carefully problem and just try to understand the notes, all these things. Okay, you will, and all of you note down this problem on your notebook and just try to understand. If you have any query with this, you can ask. Thank you.